Welcome back. You're watching Closing Trades here on ET Now. And joining us at this hour, we have Dhananjay Sinha, CEO and co-head of equities at Systematics Group. We also have our very own Kunal Bothra with us. Welcome both of you. Dhananjay, before I come to you, let's quickly take a view from Kunal. Kunal, what's the view with regard to the index? It's not been the best day of trade, right?
Yeah, it's been a bit choppy right from the start. I think we managed to hit that 26,000 mark at the front, but then I think on the intraday basis, we've seen almost like a 150 point kind of a reversal or retracement from the day's high for the indices. I would probably sense that this is more to do with the expiry action today, because we're looking at the theme for the markets in terms of sector churns, etc. And it's little all over the place in terms of the index trends as well as the stock specific trends. So I think in that sense, I would probably expect that maybe the markets would just about consolidate over here for the next couple of days. But the trajectory and the trend is still on the upside for the indices.
Okay, so sounding optimistic for the way ahead, even though we're seeing a little bit of choppiness today. Dhananjay, hi, good afternoon, welcome to the show. Another 2.5% uptick today on PSU banks, looking very strong on that front. It's actually certain names that are doing very well. Indian Bank, PSB, Maharashtra Bank, all of them are doing well. Given the kind of market setup that we're seeing where Nifty is under a little bit of a pressure, it's actually PSU banks that are one way leading whatever run-up we're seeing in the market. Are you bullish, or is that your view on PSU banks, and do you still believe that there is further upside to the kind of run-up we've already seen?
So I think there are news events that are happening with respect to the PSU banks. I think there are news of dilution and more FII participation. So there are multiple things that are happening. I think that is creating a sort of a sentiment which is positive for the PSU banks. So basically, we were also of the view that given the valuation that they are at, there is a possibility that market rotation might start favoring PSU banks. So that possibly is happening. But by and large, I would say fundamentally, if you look at this quarter, the performance of profits of the banking sector in general has been lackluster. And there has been a sort of a margin compression that has happened largely because of the lower interest rates, and overall interest income has actually been slowing to roughly about 6% if you look at the entire banking system. So I think fundamentally, I think markets are pricing in some of the news events, and also the fact that people do expect that there is a bottoming out of margins that might happen at this juncture. So that is a market expectation, and there is a sort of a role of market sector rotation that is also happening. But my sense is that it will be too early to expect a turnaround in performance. We are seeing in terms of the overall credit growth, it's been slowing, and we'll need to see whether this will expand going forward or
not. PSU banks, Kunal, you are ever so positive. I'm not sure what else I can ask you with regard to PSU banks, because we've spoken so much about this. But the move today, 0.8 odd %, on a day where there is sustained weakness on the index, you're still continuing to see PSU banks not just perform but outperform. They're just in another zone of their own.
Exactly.
What's playing out here on charts? Is this going to be a 3-month, 6-month, 12-month, multi-year? How should one look at this?
It's difficult to project the time frame, how much I think the PSU banking stocks will probably outperform. But this is a clear indication that we are looking at a sector which has become a lot more formidable than what was maybe 3 months or 4 months back. I think 2-3 months back, PSU bank index was almost at 6,700, 6,500 mark. Now the index is at 8,000 plus levels, and it's been a phenomenal recovery in this last 3 odd months for the PSU banking stocks as well as for the indices. The index itself has recovered more than 20%. So that tells you probably that stocks would probably have outperformed, especially for few of the larger cap names and the tier 2 mid cap stocks. Now we are looking at a point where many of these stocks are breaking past about their 2024 highs. Momentum is coming back into these stocks, relative outperformance. Now, when you see such kind of signal, it's generally an indication of a major trend which could shape up into the entire sector. Something, for example, which happened for auto stocks a few months back, when you saw few leaders emerging from the pack, and then many of the stocks moving up by a margin of 20-25%. So that sets the tone for the sector over the medium to long term. I would sense something very similar happening to the PSU banking index at large. Still remain one of the top favorites over here in terms of the sector approach. and I would still look at the larger cap names more prominently, the likes of SBI, Bank of Baroda, PNB, Canara Bank, etc.
Okay, so that's Kunal's take on the PSU banking space, up 0.8% right now as we speak. But like Dhananjay was flagging off, lots of reasons why public sector banks are rallying on the back of several factors, rather than one of them being the news of government mulling FDI hike in the lending institutions. ET Now had first reported about the developments last month on the on the 24th of September. Prakash Priyadarshi, who broke this news earlier, is joining us with more details.
Well, the government is mulling a hike in the FDI limit in public sector banks. In fact, sources tell us that the government is considering a proposal to raise the 20% cap on foreign investment in PSBs, a very significant development coming in. Foreign investment may increase beyond 26% and go as high as 49%. However, sources have confirmed that the government will continue to hold a minimum 51% stake in PSBs. ET Now has first reported this development last month, which is part of the government's next generation reforms in the financial sector. Sources also tell us that this proposal, among others, was discussed in the recently concluded PSB's month. A comprehensive review of foreign shareholding norms is underway between the government and RBI at this point of time, and appropriate decision would be taken at the right time. Government sources are also of the view that increasing foreign investment will ensure a stable fund flow, strengthen the capital base and support expansion of PSPs, which will also improve service quality and technology. These efforts are part of the larger objectives of the government to place at least 2 PSBs among the top 20 global banks.
Okay, so that's the take coming in on the reason why PSU banks have been doing very well. But if you take a look at the only other sector apart from PSU banks that's in the green right now is Nifty Metal. A good move coming in on some of the metal counters. Jindal Steel is up 4%, Tata Steel, JSW Steel. So it's actually a couple of these steel stocks like SAIL also up 1.5%. Steel is the flavor of the hour from the metal pack, and that is doing very well. Kunal, your take on some of these stocks on the charts. Take a look at the run-up on Jindal Steel and Tata Steel today. Your outlook on both of them?
Yeah, so I think the entire sector is looking very strong over here, Snehi. And we are looking at a point where many of the metal stocks are coming back into multi-month, multi-year breakouts. I think Tata Steel is still some distance away from breaking the lifetime high levels, but the momentum into the entire sector is quite strong. I would still believe that Hindalco is one of the top favorites over here. Of course, the stock has run up exceedingly high, and that's why you're not seeing the stock performing today as compared to many of the other peers which are trying to make a comeback for themselves. But I would largely believe that from here on, the trend for the entire metal sector still remains to be bullish. But I think at current levels, you just have to be a little bit more patient if you're looking to go for a buy. I think waiting for a mild dip or a correction over here for the metal sector could actually be a good advantage rather than buying at current levels.
Okay, and you've got IOCL's management commentary Q2 coming through. And before I go to that, Dhananjay, I believe we still have him, right? Dhananjay, on metals, give us a sense where you stand, because there was a brokerage which came out with an upgrade on a Tata Steel. When I was reading up even yesterday, metals and POSCO in particular, and their September end numbers also seemed to have a positive bias. So globally also there seems to be support where metals is concerned. Give us a sense directionally, where are you seeing this go?
So I think metals are generally trading bets. I think so. If you look at last, I would say 3 years or so, it has actually gyrated around a steady path. So I would say from time to time, when the sector rotation happens, metal do sort of pick up. And I would say 3-4 months back, the metal sector was underperforming. At this juncture, what is important is the metal sector is essentially a global sector. So we have seen that there has been a rally in gold and silver, etc. There is certain rub-off effect with respect to copper and other metal space. So I think there is a certain amount of correlation trade that seems to be happening. From a demand standpoint, I do not see a sort of a solidity as far as the underlying sectors are concerned. So if you look at China, if you look at US and other advanced economies, I think a significant portion of Steel, for instance, goes into construction, followed by autos and machinery. So these together contribute about 80% of the total, 70 to 80% of the total demand. I would say there is no strong traction in these sectors given the global uncertainties that are there. I would say there is a kind of a financial trade that seemed to be happening, how dollar has traded, how gold has traded. So I think this correlation is translating into a certain amount of buoyancy out here. From a India standpoint, there is a sort of sort of a demand for protectionism and high tariffs, and also these news keep happening on and off. So, but our sense is that if you look at past cycles, let's say we're talking about 2015, where there was a slump, there was European crisis, we saw that notwithstanding the minimum import duty that was given for the steel sector, for instance, the steel stock did not do very well in the following years. So we'll need to really look at this as a trading bet. As of now, I do not have any position in the metal sector. So I am underweight on metals.
Underweight metals. What we'll do with that is take a short break, take a bit of a breather.